I want to go into, how to position yourself into next year because, there's a lot of things going on. But first, I want to say this. I don't know if you saw this, but I took a poll. I think it was like 2 days ago on my Twitter account, and we got something like 250 people that responded. So I asked a question, it had 4 different, so the question had 4 different choices. The question was, how long will it take for cruises to be back in operation, hotels and casinos to get back to 70% capacity? I said, will it happen in Q1, Q2, Q3, or 2022? Wasn't surprising that we saw a low percentage, a single-digit percentage for Q1. So most people don't think, okay, things are going back. I didn't say go back to normal. I said 70% in cruises just in operation. Not that, all of them, it's going to be just a few of them. So a low percentage is Q1. I get that. What I was surprised at is there was close to 70% that either said Q3, and the highest percentage out of that, the total Q3 in 2022, so 70%, almost 70% was Q3 in 2022, but even a high percent said that they don't believe this is going to happen. 70% till 2022, which, there's 2 observations to make there. Okay, and again, this is my poll. This is on Twitter, and it was only 240. Probably more accurate than any freaking poll out there, the way they keep track of this garbage. It's amazing. It's an awesome job, by the way. You can make a fortune doing it, and could be absolutely wrong. But anyway, I won't go there on a rant. But there's 2 observations here. The first is, if you're looking at this taking place longer term, if it happens, say by second quarter, you should be buying cruises, hotels, casinos, and stuff. They're going to surge from here, right? If it happens sooner than that time frame.
Yeah.
The other observation is if that many people, 70%, and again, it's a small poll on Twitter, if you really believe that things aren't going to get back to 70% until 2022, you should be lightening up on your equity exposure right now, because that is definitely not factored into the stock market trading at pretty much record high levels. You're looking at Apple at 31 times forward earnings. Hasn't traded there since, the early growth days of 15, 20 years ago. Microsoft 30 times forward. Same with the FANG stocks, all 28, 29, with Google and Facebook round that out. You're looking at, even when you look at Caterpillar, like 25 times forward earnings for Caterpillar. Forget about Disney. He's probably trading at 95, 100 times forward earnings, which, again, we won't go there because I've been wrong on the stock price. People just love to buy it, and those earnings aren't going to get back to pre-COVID levels for another 5 years. People love it. They don't care. They want to get the stream. That's great. I get it. But when I look at, the sentiment of people that really believe that's going to take to 2020, if you really, seriously, if that is true, and say if this is a much, much bigger poll, and that's true, you really should be lighting up on equities, wouldn't you think?
Yeah, that or just, that and increase your hedges because, the same song and dance is going to continue. So if that does get pushed out and the market starts to sell that off, I have no doubt that you'll have not Fed Chair Yellen now, former Fed Chair Yellen, who is going to be Treasury Secretary if Biden gets in. And whoever is going to be at the Fed, they're going to make announcements and they're going to continue to try to prop everything up. So I think that's good for gold and Bitcoin. Limit your exposure on that, but it's always fun to have a little bit of riskiness like that to really capture the upside. We've had some casinos and CVO and things that are doing great, but lighten up and hedge. But I don't know, man, not liking gold and silver stocks here is just goofy to me. So I would take the opportunity to buy those. You're going to have more stimulus of some sort, which is only going to be bad for dollars, and that'll be bullish for assets.
Yeah, you're going to see that across the board, just not from our central government, for every central government in the world.
Exactly, so, all around the world.
So when I look at what's the strategy, there's one thing that I'm noticing. It's funny at the end of the year because a lot of people feel like, okay, it's over, I'm not paying attention. You're worrying about, looking at your taxes, tax loss selling and stuff like that. But it's amazing, like the past few days where I've seen clean energy is up tremendously, right? Like the industry is up like 40% over the past 4 months. It's down about 12% in the past 5 trading days. You're looking at rare earth metals, right? Because we have all of our research engines and stuff like that we pay a lot of money for, and it tells you what's outperforming for the day and what sectors aren't. And rare earth metals was up 4% on Monday, and it was down 4% on Tuesday. So there's just a lot of shifting going around. But one of the things you're seeing is stocks that haven't really performed this year, and we have our performance. You could always do better, but we've done very, very good this year within our portfolios. I think most people would agree with that. But we do have 2 stocks who are fan favorites that didn't really participate, and now they're being sold off. They're down about 10, 12%. It's getting sold off because of tax losses. People need to take losses because they have so many winners, right? So I will look, heading into next year, start doing your research now. it's your money. You don't have to. You could, go on vacation, relax until New Year's, whatever. But I'm saying, look at some of the names that are down 15, 20% in December because it's forced selling. People need to sell. They're not selling because the fundamentals of the company changed. They're just selling it because the stock price is down and maybe they bought at a higher price and they're losers. So they need to offset some of their gains. And I see that a lot where it's first, second week, third week in January. These things really, really take off because they, maybe you have a $10 stock that, is at $8. Well, okay, now people bought it at 10, it's 8, and they're going to sell it and it'll go down to 5. And in 3 weeks' time, you see this thing go right back to 8, 8.5, and, they get their growth trend back and stuff like that. You look at management, but it's a way to really, find some hidden gems and companies that people hate. I'm not saying to buy value and companies that aren't growing, but you see a lot of these stocks sell off. And there's a lot of good names out there. I mean, Asteroid Hospitality Group, Independence Contract Drilling, Ag Mortgage Investment Trust. You think that would come back? Farmer Brothers. There's a bunch of them. If you type in Google or whatever, some of the biggest losers of the year. But you're going to see those stocks sell off even more, maybe 20%, 25%, providing a pretty good buying opportunity. That's one of the strategies I look at. I think you need to own a bank. We covered that. I think banks are going to be incredible. They're trading at now they have a growth profile. Now they could increase their dividends. Now they could buy back stock. Yet, a lot of these things are still trading near book value, which is incredible. And that's usually the biggest buying opportunity. And I understand why you were trading below that with, restrictions and having handcuffs on. But now they've just been released. So you're looking at banks. I think it's a great way to even small cap, mid cap, large cap. I think the whole entire sector is going to go a lot higher. And just continue with small caps, especially micro caps, Daniel. These are the 3 areas I'm looking at, but micro caps are seeing a tremendous amount of inflows. These good ideas are getting funded, and we've gotten into 2 of them very early for our subscribers in Curzio Venture Opportunity, 2 or 3 of our last picks, where companies that you really never heard of, but, having the connections I have and then, forming these companies, doing reverse mergers, and then building these companies up that are generating millions of revenue already. It's really cool. I'm still seeing tons of ideas in that area of the market. Again, you have to be in the right circles to see these things early on, but, so far we've been good and our network is powerful. And, we've been in these things that are really starting to take off, but I'm still seeing ideas there. But I want to get your thoughts on, what are you looking into next year? What's going to happen? Whatever, if it's
sectors, if it's stocks or. Yeah, the thing I'll be screening for, like you said, we won't give away the last pick in CVO, but when you're at all-time highs, it'll be interesting to see the different mergers and different deals that are being made. So when you see headlines about a company buying stakes in other companies or trying to take them over, I would really dig into those because you have to get creative at all-time highs. It's the odds are significantly with the market even going higher, as hard as it is to be bullish, as you just keep going up and ignore basically all the rules and potential slowdowns with the economy given the virus and the vaccine and all that kind of stuff. Be prepared for a headline. I saw somebody that took the vaccine that passed away. That's awful, but those kind of headlines are going to be coming. Heaven forbid somebody gets it after the vaccine. That's going to be a crazy headline. So we're always going to have to deal with that. But and then the other thing would be looking at strong management teams, of course, and activists. So I think it's a really interesting story that Intel popped 5% on Dan Loeb getting involved. And I think you're going to see more of that Intel, I don't have it right in front of me, but it's P's probably 11.
Yeah.
And it's a great company. Yeah, they've screwed up a lot. We used to have that. I got so sick and tired of hearing about the delays in their chips coming out. But that's a rock solid balance sheet company. It's ripe for low hanging fruit for somebody like Loeb to come in and push them around. And, that stock could easily go up 25% from here. Mm-hmm. And that'll be neat to see the big conglomerates be held accountable by some old kind of corporate raiders that Carl Icahn, was so famous for in the 80s and 70s, I guess. Mm-hmm. But I think the Intel thing is really interesting. And following Dan Loeb is usually not a terrible idea.